All right, young people, it's that time. It's time to start learning about credit. So here's the thing. The first thing you want to do as soon as you turn 18, you are eligible to get a credit card. Once you are working or you're in school. When I was in school, going to college, I had all kinds of people lined off in the foyers of the college I went to, basically throwing credit cards at me. I had no idea what credit cards were for. I really didn't have any knowledge whatsoever about credit cards. Heard the term used, from my parents and all that. Stay away from credit cards and all them things. I'm gonna get you in a debt and blah blah blah. But I never really understand what it was all about. But everybody kept saying, here you need to establish credit. You need to establish credit. So you need to use a credit card, take a credit card, blah 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 blah. So I signed up for credit cards. I got maybe about five in my first year of college. And I remember my father always telling me to make sure to pay the bills on time. That's something he drilled in my head as a child, so I did that. But still, I didn't really have an understanding as to what I was doing using this credit card thing and credit. What is credit? What is the purpose of this term credit and building credit and make sure your credit is in good standing and pay the bills on time and all these different things. So, I had good credit because I paid my bills on time. I followed my father's rules and, did that. But never really understood the value of what that meant. To me, it was just, I remember having a Canadian Tire credit card and I had a car. I needed to buy things for my car when it needed to be serviced, get the oil change done and stuff. And, I'd use the credit card and then I'd go and pay it back off. Get some gas, pay it back off. It was just what I did. Still not really understanding that I was building credit by doing that, not understanding that I had excellent credit by doing that, and that as a result of doing that, the financial services industry, like the bank, if they pulled my credit report, saw me as someone that they would lend money to because I was responsible in paying the money back as well as paying the minimum payment monthly on time. So these are all terminologies that you're going to have to learn. Minimum monthly payment. What does that mean? You have a credit card, okay? You go and you get one credit card. At your age, as I have children who are in your age group, what I told them to do is to use the credit card to pay for their phone bill. Because all you teenagers have phone bills. I personally have my teenagers pay their own phone bill. Once they reach a certain age, get a job, pay your bill. So you have your phone bill that you need to pay monthly. So instead of paying the phone bill monthly with cash, take the credit card and pay the bill monthly with the credit card and then turn around and pay the credit card back off completely. Understand what I'm saying? So you have a credit card, you have a phone bill. For my older children, they had the phone bill and they had their, like to go to the gym and work out, so they had their bill for working out at the gym. So I tell them, use your credit card, pay your phone bill monthly, pay your bill for the gym monthly, and then turn around and pay the bill, the actual credit card bill, pay it back off completely, right? So instead of you paying $20 on your phone bill every month or $40, whatever the bill is for the gym or the phone bill, you use your credit card and pay the bill and then turn around and pay the credit card back off. So what you're doing in doing that is two things. You are using your credit card, which is something that you want to do in order to build credit. And at the same time, you're paying off the entire balance. So you're not carrying a balance every month. You have a zero balance every month because you're paying off the entire balance every month. So you are doing a favor to yourself in that you're building credit, you're establishing credit, because at some point in time in your life, whether it be a year, 2, 3, or 4 years down the road, you're going to want to buy something that is more than what you can pay for in a lump sum. As in, you might want to buy a car. If you want to buy a car that costs $1,000 and you can save $1,000 and buy the car cash, then so be it, do that. If you want to buy a car that costs $30,000 and you haven't the ability to save $30,000 in 2-3 years, so then what you're going to do is finance the vehicle. What does it mean to finance the vehicle? You're going to take out a loan. You're going to go to a bank or you're going to go to a car company and they're going to pull your credit to see if they will lend you money to buy that $30,000 car, which you are then going to pay back monthly at a certain interest rate, depending on what your credit is like. So if you have established credit in the sense of paying your monthly fees on time, you can pay the minimum monthly payment, which could be $30, $40, $50 every month. And if you are paying the minimum monthly payment on your credit card, that means that you're carrying a balance over every month. When you're carrying a balance over every month, that means that you are paying interest on the money that you are carrying every month if you're paying your minimum monthly payments on your credit card. If you're paying off the balance every month, then you are not carrying a balance, so you're not paying interest on anything. Follow me, okay? So what happens now is that if you have established excellent credit, you can go out and buy a vehicle or finance a vehicle at a very low interest rate or zero interest rate, so that you're not paying interest on the vehicle, you're just paying the money that is owed on the vehicle, right? If you've established a poor credit rating because you haven't made your minimum monthly payments on time, doesn't matter if you've decided that you're going to carry a balance, that's fine, but you must, for one thing, you must pay the minimum monthly payment that is determined by whichever credit card company that you are with. You have to pay it on time. So if it tells you that you need to pay the minimum monthly payment by the 30th of each month, that means that you need to pay the minimum. If the minimum is $20, you pay $20 on the 30th or before the 30th of the month. Do not pay $20 on the 31st, because then you are paid late. Okay? So it's important to understand that either you pay the minimum monthly payment every month on your credit card on or before the due date, or you pay off the balance on or before the due date in order to establish excellent credit. Okay? Outside of that, if you pay after the due date, you now have established poor credit because you haven't paid on time. So it's a negative thing for you to do that. You don't want to practice those habits, okay? And I know when you're young, you don't think about things like this. This doesn't, it's like whatever. But trust me, I'm trying to teach you guys these things from an early age so that you can establish excellent credit, so that you can go out there and purchase things in the future that is not going to be charging you high interest, meaning that you're paying more than what you're supposed to for that car, or for that mortgage if you're going to buy a house, or let's say you want to buy a motorcycle or a boat or anything out there that is more than what you can buy cash, and you're going to finance it. You want to be able to pay the lowest interest rate, if not none, because you've established excellent credit. You've established the credit that you've worked for every month to pay your monthly payments on time, or paying off the balance, whatever it is that you choose to do, okay? It's the habits that I'm trying to get you guys to understand that is important for you to establish at 18, 19, 20, 21. The foundation of establishing your credit, starting it from your 18 years old. If you understand the value of your credit, you'll do it. The reason why majority of young people end up with bad credit is because no one's ever taught them the value of their credit. Nobody's ever taken the time actually to speak to them about credit management and the importance of establishing excellent credit for your future. Many of us, such as myself, go to college or go to post-secondary education. We're so focused on school, we're so focused on getting to where we want to be, not understanding that credit is a part of that journey, because you can finish school, never establish credit, have a wonderful job, have a student loan, right? Paying back that student loan. But if you have not established credit prior to that and you want to go buy a house, you can't, because not having any credit is the same as having bad credit. If you do not have established credit, the banks cannot lend you money. They don't know if you're going to pay them back on time, because there's no history in your credit file to show how you pay your bills. So it's important to always establish credit, even if you're not going to be someone to use a credit card in the sense of carrying a balance. Use it, pay the balance off every month, so that you're establishing your credit history over the period of time that you're in college and university, so that when you graduate and you're ready to go out and make those big purchases, You have a credit history that the banks can look back on and say, yep, we can lend you this money. Yeah, you can get this mortgage at an excellent rate because you have established excellent credit. Okay, so I'm going to stop there because I know I've spoken a lot in a short period of time. I know I'm going to get questions. I want to see where you guys are at. I want to be able to speak to what you want to learn and understand better. Okay, so that's just my little snippet for today. God bless you all.